Herrera, and we're about to end 2022. So I wanted to talk to you about the economic situation because we have heard financial experts and economists talk about the high inflation that we have and that some repercussions are coming because of that, and we don't really have to be too smart to understand that things are going in the wrong direction, because governments, our government and many governments in the world, they are inflating. The inflation is getting crazy. The fiat currency of all the countries is just coming out like if there was like a fountain of money, and money keeps coming out from those central banks like there would be no tomorrow. And that has consequences, because when that happens, that the money is inflated, then is the much more money chasing the same amount of goods, because the goods do not get multiplied as the money gets multiplied. The goods are the same ones. The goods are produced by economic growth, by manufacturing, by designing, by creation, but not, by industrial processes, not by money creation. Money creation is inflation, and the more money is in the market chasing the same amount of goods, creates price adjustment. Prices go higher because there's more money that doesn't keep the values, money that is valueless, for chasing the same amount of goods. So for the manufacturer or a seller to sell their goods for devaluated money, they ask higher prices to get the same value. So that's basically how it works. And I was listening earlier this morning to Peter Schiff, which is an economist that manages an hedge fund, and he manages or owns Euro Pacific, and he was talking about how bad things are going to be because of this irresponsibility of the governments that use the central banks that can create money out of thin air to solve the issues that those governments have, and that just dilutes the purchase power of our money. And the other way that they can do that they can fund their programs is by increasing taxes, but people do not accept higher taxes. They rebel against those because unfortunately the people in government, the ones that have the power to make the decisions, they do not use that money prudently. They waste it. They throw it away. So we do not accept that they put more taxes to throw the money away. Now, when they tell the central banker to create more money and give it to them in exchange of an IOU, we don't feel that immediately. So for that reason, we do not rebel against that. unfortunately, it comes to affect us in higher prices. And that's what the population feel it and can rebel against those politicians, but unfortunately at that time could be late, because this inflation is not happening for the last decision that these guys are taking. No, it's been growing for many years, because all those governments have been irresponsible with the purse, with the manage of the money, by asking the central bankers to just give them more money. And since August of September 1971, that Richard Nixon separated gold from our currency, then from the dollar, then they really went crazy. And back in the end of 1970s or 1980s, the national debt was still in billions, but we are now in trillions and a lot of trillions, in the 30-some trillions. So that's a lot of money. That's a lot of money to owe. So now that the interests are going higher, even the government is going to start feeling the consequences of that. So we're going to have bad times, bad economic times. And for that reason, I wanted to talk about what the infinite banking can help with on the recent forex trading that I've been getting involved. So the infinite banking is a very sound, stable, incredible process that unfortunately it requires discipline, because you need to save, because the infinite banking cannot be created with borrowed money. It has to be created with capital that has been saved. But once you have enough capital, then you can enjoy the benefits. The benefits are guaranteed interest, a lot higher than what the banks pay. Dividends, because you get to be part owner of the company that we set up those solutions with, mutual companies. So you become part owner of those companies, and for that reason you get dividends. Because normally insurance companies are well managed, not like banks. It's not insurance companies, they deal with risk on the long term, 50, 70 years ahead. Banks deal with risk immediately. That's why it is such a fragile business model, especially because they also use fractional reserve banking, which is a racket, and it's immoral and it's a fraud, but it is accepted. We accept it, so it continues. But banks use fractional reserve banking, and that allows them to multiply the money that we deposit with them, and when we borrow from them, we actually help in this creation of money, because when we go to ask for a loan, they are not going to loan money to us that they have in their coffers. they're going to create that money when we ask for it, and they make it they make a digital number and put it in the system, and now we owe them that money, and we have to pay interest on money that they just created, that it didn't exist. So the banking business model is rather tricky. So anyway, the interests are going up because the markets are fed up with the low interest and the creation of free money. So to contain the inflation, they now have to raise the interest. And when they raise the interest, then it becomes harder to obtain a loan, and also the government gets in trouble with all the debt to be able to make the payments to serve that debt. And in the case of the consumer, if we have variable loans, then at a point it becomes a problem because the interest starts raising. So those loans that we took start to be costlier. If we were savvy enough to take loans at a low interest with fixed interest, then we are in a position of advantage. We just need to be able to pay to make our monthly payments, because if we cannot do that, they can call for the payment of the totality of the loans, and then we'll be in trouble. But if we are able to make the monthly payments, we are in a good position because we are paying those loans at a very low interest, when now to access a loan is a lot, the interest is a lot higher, and because of inflation, also the cost of those loans at a low interest, as time goes by, it becomes less tasking for us. So it's a good thing to have a fixed loan at a low interest. Even if it's taken now at a fixed rate, even if it's higher, if you can afford it, it's going to be beneficial, because with time, because of inflation, the payment of those loans become easier. But I deviated a little talking about the banking business model, but the infinite banking is extremely beneficial because you get guaranteed interest that is much better than what you get in a bank, and you get dividends because you are part owner of those mutual companies. It is also private, so whatever money you are able to put into these dividend paying whole life insurance policies, you don't have to show them. You don't have to show them to the IRS, and you don't have to show them to the financing consultants that can decide what money to grant or lend to you if you have if you're looking for financial aid for education, like for your children, or maybe your own education. If you want to take on going to higher education at a higher age, well, it is the same thing. If you're applying for financial aid, you don't have to show the money that you have in your dividend-paying whole life insurance contract. Now, if you were working with a 529 or Coverdell to be ready to pay the higher education for your children, then unfortunately the consultant that is going to offer you financial aid is going to see the money that you have on those 529 or Coverdales, and they're going to ask you to spend it before they give you any help. So that's why the infinite banking is so good in this sense. It is also protected because it is classified as the same as retirement money, and better than the retirement money that you have in your 401ks or IRAs. When you're going to pass it to your heirs because you died, it's tax-free. The IRA and the 401k, they're gonna have to pay taxes when you die to receive that money. And even the Roth IRA, if you die, maybe they don't have to pay the taxes on them, but it's just the money that you have in your Roth IRA, contrary to the insurance where you had a cash value, but if you die, they're going to get the death benefit that is a lot more than what you had in cash value. So those are some of the benefits of the infinite banking. So if you have positive cash flow and you have decent health, then you can approach a consultant like me that understands the ins and outs of the infinite banking and can help you set up one of those solutions. Health is a factor, so you need to qualify for it. Age is a factor that it might make the getting of this solution a little more expensive, but age is not disqualifying unless you are already 75 or 80 years old, because that's when the insurance companies stop offering insurance to people at the age of about 80, because then you only have very few years before you die, and insurance companies cannot work the money long enough to comply with the promises that they make when they issue a life insurance policy. But that's why we advise people to take on insurance early, because if they take a permanent policy early, they don't have to worry about their health. If their health deteriorates, it doesn't matter. You are already protected in your life insurance. If you wait and you're gonna take on life insurance late, when your health has deteriorated, then it's going to be a factor that you might not qualify, or it's going to be a lot more expensive because you are older and your health is not good. So if you're interested on the infinite banking, take it as soon as you can. Now, those are for people that already have an economy that are fairly good. If you don't have a good economy, but you have some money that you can put to work on a forex trading venture, some money that is not going to be catastrophic if you lose it, because this is not guaranteed. Now, the infinite banking, as long as you pay your premiums, you are guaranteed the promise that the insurance company made to you. So that's the difference. The forex trading is not guaranteed, but if you have some money that is not catastrophic if you lose it, that you can put it to work in Forex trading with artificial intelligence. I can share with you the platform that we're using, and it's working phenomenal, because the growth since April of this year that we started the Forex trading is going above 400%. It's like, at this time, I think it's like 460 some in growth, and calculated annual return is going above 600%. So, and that was starting on April. So a yearly calculated return is very high for a whole year of Forex trading. So if you're interested on any of those, contact me at jorgeeherrera.com, because 2023, based on what most economists are talking about, is going to be difficult. So do something to prepare for it. I've learned from economists that putting some money in gold or silver is a good idea also. And buying hard assets is also a good idea. But businesses or investment the due diligence has to be done properly, because we're coming into difficult times. So I wish you with all my heart for the best 2023 for you, that hopefully it doesn't hit you too hard, and enjoy the celebration of the ending of the year and the coming of the new year. Maybe if you have a very bad 2022, you are happy to know that it's ending. And if you have hope, because if we have hope, we can manage to survive. Without hope, there's no tomorrow. So keep hope that 2023 is going to be a good year for you. I'll see you next year.